CEO, Mahindra First Choice Wheels. We're also getting a perspective from him on how the demand for used cars is likely to shape up post the lockdown. Ashutosh, thanks so much for joining us. As simple as that, really, how will all this translate in the pre-owned vehicle market? What's the kind of demand you see post the lockdown? What's the difference really that you perceive in the new world order?
So I think, we've done a big research to figure this out. There have been a lot of studies out in the market. I think our research confirms that there is some initial evidence that there is a pent-up demand in the market. About 60 to 70% by different researchers and 68% in our research. 68% of customers say that they would buy a vehicle in the first 1 to 3 months. However, having said that, I think the reality is a bit nuanced because the way the consumption pattern has gotten inverted, the impact of lower spend or lower likely spend on discretionary purchases hasn't hit as yet. The other evidence is that there is a very significant trend towards downtrading, with about 40% people saying that they would prefer a smaller price band up to about 10 to 30%. If you put that in perspective, I think there is very clearly a bit of a tailwind in favor of used cars. That is from the demand side. The supply side of used cars is a little bit of a hazy picture at the moment. But on the whole, we expect that last year we ended used cars at about 4.2 million. We should see roughly the same number this year, give or take -1%, -2% to +1%, +2%. So compared to the overall auto market, I think the used car market is likely to do reasonably well.
Okay, so that's the perspective coming in there. In terms of, the fact that the used car market is largely unorganized as well, could it be an opportunity to streamline things in this particular segment of the industry?
Trend towards organization of a non-organized market is well and truly underway. I think crises like the one we are going through actually gives a bit of a fillip to it. As you know, that because of small traders or brokers, etc., being part of this whole ecosystem, there is a need for organized folks like us to bring in and set the systems and processes, and more importantly, in the bargain, give customers the confidence that what they're buying isn't going to break down in 2 days, that it's backed by a warranty, it's backed by a certified vehicle, and so on and so forth. It's sanitized well. So I think all these things all these sentiments in terms of how customers are viewing car purchases will help accelerate the organization of the market. Don't forget that there's likely to be a lot of repossessed vehicles in the market as well. And therefore, that part of the value chain, which is also the B2B side of the value chain, will increasingly get organized as well.
Sure. And that's what I want to probe a little bit deeper into. With the slowdown, weak consumer demand, job losses, salary cuts, what have you coming in, do you also see customers downgrading their choice of vehicle? Maybe a hatchback as opposed to a sedan, or, applicable as per individual interests?
Absolutely. I think, like I mentioned, I think we have very clear evidence that customers are, now we have some metric to it. We can ascribe a value of a down trading happening to the extent of 10 to 30% is what customers are looking at. Hatchbacks are suddenly back in vogue. Although there is still a resilience for the SUV kind of a segment, but sedans have, especially at the lower end, the sedans have picked up. So there is very clear evidence that people are going to downtrade. Having said that, there is a counterintuitive stuff that's also happening. We'll have to see how it plays out, where people who were looking at buying a two-wheeler are now trying to feel that, look, if I want to take a loan and roughly for the same down payment or probably less, I could actually migrate up to an entry-level used vehicle. So I think that evidence is also there. Having said that, we'll have to see how it plays out. But you're right, it's a very clear trend towards both downtrading and a preference for personal transport. These are two big themes that seem to be emerging out of this crisis for used cars, at least.
I understand you were earlier looking to open outlets dedicated to sale of luxury cars in 2020. Does that plan now get pushed back? Because I guess that's the segment that would be the hardest hit.
I think, in used car, like I've mentioned before, used car has never been until now been about demand. It's rather been about supply. So I think what happens at the entry level of the market also happens at the higher end of the market. So you're right, we are being slightly more circumspect when it comes to opening dedicated luxury stores. But I don't think that, once the thing stabilizes in say 6 or 8 months time, there will be any lack of demand for a used vehicle. It's just that the supply won't come. See, one of the things that you have to understand is that in today's world, just as people are trying to buy a value end vehicle, people who currently have vehicles will also try and hold on to their vehicles as much as possible, which will reduce supply coming into the market for a used vehicle, which I think is, for our purposes, a slightly larger and a slightly longer term and a slightly more difficult problem to solve. At a demand end, yes, there will be a low demand, there will be entry level, vehicles, etc. But once the things kind of, come near normal, or even say 50% of normal, I think the demand part will probably get sorted out.
Okay, Mr. Pandey, hi there, good morning. I just wanted to understand a little bit more when it came to your expansion plans and whether or not they're on track, because I understand there was a target for about 1,200 outlets. Are you redrawing this strategy? Are you redrawing your spends in order to tackle the ongoing crisis? Are you looking to, in the post-pandemic era, continue to focus on the sale of luxury cars as you just spoke of as well?
Yeah. So I think first point, I think, yes, our plans are very much on track. Yes, they have been pushed back by about 3 to 4 months, unavoidably. You have to understand that our model is very franchisee-led model. So we appoint franchisees. And a bulk of our franchisees actually come from folks who were earlier participating in the unorganized space. So because there is a natural momentum towards organization of this unorganized market, I think we'll be easily able to reach the 1,200 mark, dealerships that I said. Yes, it may get stretched out. I don't think we'll get there, say by March next year, but certainly by this time, June, maybe July next year, we should reach that particular mark. So I think that's on the number of outlets. On the number of luxury focused outlets, yes, we will kind of take a pause for there. We will continue to kind of invest in the existing stores that we have, and we will revisit these plans as soon as the supply tends to kind of get normalized over, say, a 6 to 8 month period.
And what are the plans in place in order to mitigate any extra spending or managing your costs at a time like this, especially for the sector in which you're currently operating in?
Yeah, I think because we are largely a startup kind of a setup. I think cost management has been one of the stuff that we kind of been focusing on all along. I think there will be cuts of spending. There are moderation in the marketing spend. One of the good trends is that a lot of offline marketing, or all the mainline media marketing that we used to kind of focus on earlier, that will move towards digital, as we ourselves are a big digital company with the car and bike acquisition and things like that. So I think a lot of our marketing spends will come down. Some of our fixed spends we are trying to reduce as much as possible. But I don't see anything really deep that we will need to take, at least in the next 6 months. Because, like I mentioned, this is an industry, one of the few industries which actually can say that, look, there are some factors going for it, at least in the medium term, if not in the short term. So I think we will probably weather this out, easily. But if not, yes, there are plans to kind of do slightly more, cost rationalization plans, especially on the marketing side, in the next few months.
Appreciate you taking the time out. Thank you so much for joining in, Mr. Pandey, and giving us an insight as to what your strategy is and what we are seeing in terms of demand for used cars, what the outlook is in terms of curtailing your costs, as well as for the luxury segment. That's a word coming in from Mahindra First Choice Wheels. Well, just a quick